Hey, hello everyone. Welcome back to this YouTube channel 30CAGR. Friends, in this video, we are going to discuss a very important topic. And this topic is very useful if you are a trader or an investor of stock market. So please watch till the end. And in case if you like it, don't forget to share it. It's okay if you don't like it also, but please do share it if you think this is useful for your friends and colleagues. Okay. Before we begin, in case if you haven't subscribed to this channel, please do subscribe and hit on bell icon. Okay. All right. So in this video, we are going to talk about a couple of funds that recently Zerodha has introduced, and we will discuss about those funds. But before that, let's take a step back and we'll talk about one other topic. If you're a trader, then you pretty well know this point that, most of the traders generally what they do is, let's say they have 1 lakh capital, they pledge this capital, let's say they buy some stocks, or they can do anything. In fact, not just stocks, they can invest in anything, and then they pledge these instruments, they pledge it with the broker. Okay. And they get some amount like maybe 90% or 80% or 70%, and then they trade with this. This is not new, so many people are already doing it. So let's say your investment went higher and then your trading profits also went higher, then it's a double advantage. It's an added advantage for you, since you are getting some money from the investment and then some from the trading, right? So it's like a double bonus. And this is quite useful for full-time traders. All right. This everybody knows this. And one more reason why people generally park their funds in some instruments is to avoid the quarterly settlement. As per SEBI rules, after every 3 months, the broker has to send your money back to your account, and that's called quarterly settlement. For that reason also, many people park their amount in some instruments so that they can avoid this quarterly settlement, right? Because these two are generally the basic reason why people pledge, take the money from the broker, and then they trade using that money, right? Now, before we discuss further, let us actually go and look at the risk disclosure that you see when you log in into any broker. Okay, be it LS Blue, Angel Broking, Zerodha, whenever you log in, you see this kind of risk disclosure, right? What that says is 9 out of 10 individual traders are in losses, which means 90%. Not to forget, even other 10 also, there might be people who earn like 10,000, 20,000 or 30,000. And those small amounts would also be taken away by the expenses. So in fact, the number of traders who are probably losing in stock market are more than 90%, right? It would be probably around 90 to 95%. Now, let us think of a scenario. You have 1 lakh, and at the end of the year, you got like, a loss of 5%. Okay. So minus 5% is your, net loss at the end of the year. If you get 5% profit from your investment, okay, then that becomes plus 5%, which is 0. You are probably in a better position compared to other 90% of the traders, because they got losses, but at least you got no profit, no loss. This is the first scenario. Now, the second scenario is, let's say from trading, you did not get anything. You are at no profit, no loss, but still you get 5% from the investment, which means your net profit is 5% for that year, which means probably you are in a better position compared to more than 90%. It's like maybe 90, 92, 93 or 94% of the people. Okay, better than those people. And let's also talk about the best case scenario, third scenario. Let's say you are in a profit of like 4% or 5%, or let's say 20%. Okay, you got 20% profit from trading. Even then, you get 5% extra, which becomes 25%. You will surely be, ahead of 97 to 98% of the crowd, right? So the point here is, if you are getting free 5% or 6% or 10%, okay, you should not let that go, and you have to make sure that you utilize those options, right? And that comes through investing and pledging. Now, the $1 million question here is, what should we pick when it comes to investment or pledging? Which instrument we have to consider? Okay, there are a lot. You can take stocks and then you can pledge it with the broker. or the second is you can also consider bonds. These are like backed by RBI and central government. So this is like zero risk instrument. You get a return of maybe around not really 5%. I think these days it has become like 6.57%, almost equal to bank FDs. And then you also have ETFs, exchange traded funds. So yeah, there are a lot of options that are available for you to invest and then pledge those instruments, right? Now, which one should you pick up? Okay, if you pick stocks, you have to be very good at prediction. You should know which stocks are of good quality. Otherwise, what happens is after you invest, if the stocks start going down, then obviously the pledge money also will goes down, and the broker will start selling off your stocks also. Okay, so this is like an option only for I would say people who are very good at prediction. Okay, and then the second is bonds. These come with zero risk and they give a return of around 6% or 6.5%. To some people, this looks very small, okay, 6% or 6.5%. But for some people, it's like a good amount to start with. So you can also invest in bonds and pledge that. But the point is, if you want to get out of the bonds, sometimes it might be a little difficult for you. Okay, of course in central bonds you should not face any issue, but still there is a risk. Okay, sometimes if you want to sell, maybe you have to sell at a loss, or you also have to wait for a few days to sell it. Especially in state government bonds, it is really a very big problem. Even in central government bonds, sometimes you might face this issue. So that, yeah, actually comes with a little bit of liquidity issues there. Okay, and then we have ETFs, exchange traded funds. This is I think really a good option, but still again, ETFs are similar to stocks. It might go upside and downside, but the point is you don't really need to take a decision yourself. Okay, mutual funds or ETFs, you can just invest in that, and then the fund managers probably would take the decision in case of mutual funds. And in case if it is ETF, then anyways we have like a set of stocks that are trading in the exchange, let's say Nifty 50. Okay, there is an ETF that invests in Nifty 50 stocks. So whatever money that you invest in, let's say you have like 50 rupees, you are investing in 50 rupees, that goes to first 50 companies. Okay, Nifty 50 companies. Okay, 1 rupee in each company probably. So the point here is ETFs are like an instruments that are driven by a set of stocks, a defined set of stocks, and you don't need to invest a lot of time in that. Okay, so these are a few instruments available. As I said, mutual funds are there and other things are also, but every instrument has pros and cons. So you need to decide. Okay, stocks are a bit risky, and then bonds come with limited returns, and then ETFs, they can give you even 12-20% also. Nifty has generated 30% return in the last 1 year, I think approximately 25 to 30%. So maybe you can also choose ETF if you believe in India's growth for the next few years, right? So these are various things that you can think of, and in this video we are going to discuss about a couple of ETFs that Zerodha has introduced recently, and they are pretty good. Okay, we will look at that, but before that, one more point. Most of the people know about this liquid base. Okay, this is also an ETF. It invests in like short term things, and mostly 99.9% it is risk free, and you get a return of around maybe 3% to 4% in this. Okay, it's a highly liquid instrument, which means you can enter anytime, you can exit anytime. It generally trades around 1000 rupees all the time, so you can enter, exit anytime. But the problem with this is the taxation a bit. Okay, it keeps giving you the dividends, and it's really pain to put it when you are tax filing. All right, so it's really a little bit of headache. So people generally they don't put it in the liquid base directly because of that reason. Okay, so let's see what are the couple of those Zerodha funds that we are going to discuss, and how they are related to liquid base. The first one is liquid case. Okay, recently Zerodha has introduced liquid case. It is nothing but the liquid base only, but you don't have the headache of dealing with the dividends. Okay, it's like a straight NAV, day-to-day NAV, and you will see the growth of the fund just like any other stock. Okay, it's very easy to invest and manage as well. Okay, you don't have any maintenance issues. and during the taxation also you will not really face any problem. So you just have to go take the ETF just like any other stock, pledge the money, and then you can trade with that money. Okay, it is totally risk free, or mostly 99.99% it's risk free, and it's a good instrument for people who would like to pledge and trade with zero risk. All right, and then the second instrument is really very interesting, that's called Zerodha Nifty Large Mid Cap 250 Index Fund. Okay, recently this was introduced by Zerodha, and what this does is it's again the ETF, exchange traded fund only, index fund. And what it does is whatever amount that you go and invest in this fund, it will invest in the first or top 250 stocks, which means this 250 covers large cap, mid cap, and I think a few small cap as well. So almost 87% of the companies that are listed in the exchange, okay, will be covered under this fund. So it's like probably extremely safe. In case if market goes down, nobody can do anything, all the stocks will go down, all the funds will also fall. But if you believe in India's growth for the next few years, okay, let's say for the next 5 years or 10 years, see, everybody knows that there is a prediction that India crosses US GDP by 2043 or 47. I don't exactly know. So if India has such a potential, and if we continue to grow, what we have been doing in the last few years, okay, if we continue that, then I think there is a chance that all these funds will continue growing higher and higher. I think the average return is around 12% for the Indian economy, or all these indexes. So if that is true, then I think this will give you a very good return. Also, if you consider compounding, then it will really shoot up to a large extent. So yeah, in case if you believe in India's economy, I think this will be the best fund. And that's not it. Another important thing is this is also covered under ELSS, okay, equity linked savings scheme, which means you can also get an added advantage of ATC. Okay, so in case if if you are looking for any kind of savings to get the tax benefit, I think this will be a good option for you, because I don't really think there is any fund that's covered under ELSS, which is an ETF. Okay, I don't know if there is any fund, maybe there is, but I don't really find such funds which are covered, which are ETFs, and then they are covered under ELSS. But this one, this is an ETF, and then this is like a very good fund, which is like hugely diversified. And as I said, this is this also has a potential to grow really big in the next few years if you believe in India's economy. So this one also you can buy and then pledge it. Let's look at the document. This is from Zerodha's portal directly. Can these two funds be pledged? Yes. These two funds can be pledged for margin as they are part of approved list of securities for pledging. Okay, you can see the Excel. In the Excel also you can see that liquid case is listed here. 10% is the haircut, which means if you invest in 1 lakh and then pledge it with the broker, you get 90,000 back for trading, and then 10% will be the haircut for safety reasons. Okay, and I guess the other thing, which is the large mid cap 250, is also somewhere here. I couldn't find it, but I'm pretty sure that that is also available for pledging. And also remember, guys, if you trade with any broker, it doesn't matter whether you are trading with Zerodha or LIS Blue Angel Broking, these funds are available with all the brokers. Okay, so these two Zerodha funds should be available with other brokers as well. So it's you who has to decide which fund is good. If you want zero risk, then I think liquid case is better, because it comes with zero risk, but the returns are extremely low, like 3% or 4%. But if you believe in the growth for the next few years, then I think large mid cap 250 fund is better. Or you can also split into both, and then you can pledge both the instruments. And last but not the least, you also have government bonds. As I said, if liquidity is not a big issue for you while exiting, if you can wait for a few days, then I think you can also go with government bonds, which generate around, I think current yield is around, I think return is around 6.5 to 7%. So you can also go with central bonds, but don't go with the state bonds, because state bonds seriously have some liquidity issue. In fact, I myself I was a victim of that. So it was like a tough exit for me. So yeah, just in case, if you want to consider these two funds, you have them available now. Okay. So that's all for this video. And guys, in case if you have any questions, just put it in the comments. I'll try to answer them. Or you can also visit our website bluechipalgos.com and contact us. Okay, thank you so much for watching the video. In case if you feel this is useful, consider sharing it with your other traders or colleagues, and if you like it, just like the video as well. Okay, but don't forget to subscribe for more such informative videos. Okay, thank you so much for watching and have a great day.